Drama, drama, and more drama.
That's what the rest of the trading week is going to have in store for us. And you could already tell today, to kick off the week, Monday is setting the stage for some sort of Shakespearean level drama that will most likely send the market sky high, or it has the capability to take it out at its knees and send it, I guess, to the depths below. If you're not really paying attention to the market right now, it is very easy to say it's calm, not much is going on, and in fact, it looks a little placid. But like the movie Lake Placid, that gave me many nightmares when I was growing up and I still question why my parents let me watch it, there's a giant alligator underneath and there's a lot to be scared of. So in this video, I'll be breaking it all down. I'll let you know exactly what you should be paying attention to in terms of major announcements. But from there, also we got to chit chat about where this market might go. And of course, I'll give you a little bit about individual equities and some of the drama going on in that world. But before we get to all that, if you enjoy these type of market breakdowns, don't forget to like, subscribe, share this video with your grandma. And with that being said, let's rock. Just for a little bit of context, when the market officially closed today, Monday, December the 8th, the headline was this: S&P 500 closes lower as investors tap brakes before Fed decision this week. So the overall market, the S&P 500, still not that far from the all-time high. We sold off, we had a nice recovery, and now we're in this stall out period. Pretty much the same in the NASDAQ. We sold off, we popped back, and now, yeah, upside gap fill, not that far from the all-time high. Pretty much the same situation. And also looking at Bitcoin, after the sell-off, we had a pretty decent recovery, but like the equities market, pretty much just waiting. And it's these environments that I know a lot of people are thinking,
Ah shucks, my zero DTE calls or puts didn't pay.
But let me remind you, you can make a bunch of money in these environments. In fact, it might be my most favorite environment. And as you can see here, just to give a little bit of proof to the pudding, in the Goonie Trading Discord, Piper fired off at about 10:41 this morning, suggesting a premium selling strategy. Today, sold some call credit spreads. This is a neutral to bearish bet. Once again, you're just betting on an under. It's almost like if you're a sports bettor, you just want it to be under that value. So on the SPY said below 687, Q's below 629. Obviously that ended up hitting. So for the base unit size of 352, it returned 48. I decided to take it with SPX. I played it a little bit larger, 12 contracts. You could see that I sold it at 70, bought them back at 5 cents. That's $65 per one. I had 12. So I made $780. And once again, pretty basic, just premium selling. It was an under bet. Obviously on days like this, I love selling premium in the options market, but I don't mind doing a couple scalps here and there when it comes to trading futures. So for those of you who checked out the live stream, shameless plug, Monday to Friday, 9 to 11, you can watch me degenerately trade my own account. You can see on my futures accounts here, I made a couple shekels, about $15,000+ trading the NQ contract. Still waiting on my payout from Apex right now. It's currently pending, but right here, there were decent intraday ranges. And really what I find on this point is it's just better to be sending your stop to break even. And if you get lucky with a runner, well, congrats to you. Anyhoozle, that's all in the past, and if you're watching this, you're probably more curious about where we are going. And as I said at the start of this video, this week is full of drama, and even more drama. So tomorrow, Tuesday, December the 9th, not that much drama. Jolt job openings for October, 10-year note auction, so if you're a bond trader, you might care about that. Similar situation on Thursday, another 30-year bond auction, but the real drama of this week is in the afternoon on Wednesday, December the 10th. We get the Fed interest rate decision at 2 p.m., but the first round of drama is actually not just that. It's the fact that we get the SEP, the Summary of Economic Projections. What is it? Well, it's when the FOMC participants' quarterly projections for economic growth, unemployment, inflation, and short-term interest rates. The summary also provides information regarding policymakers' views on uncertainty in the outlook. So for those of you who don't speak nerd, that just basically means every other FOMC meeting, we're going to get this update from the Fed themselves of where they see things going. And when I say things, I mean unemployment. They're talking about GDP. We're talking about inflation. Every other FOMC meeting, every individual voting member gives us their idea. And then that's those fancy dot plots. So this one is going to pack a little bit more of a wallop at 2 p.m. more than normal. But in terms of the interest rate decision, that part itself is going to be a little bit boring because we're already pretty confident we're getting a 25 bips rate cut. According to the Fed Watch tool, basically the bond market, they are 89% confident we're getting a 25 bips rate cut. According to Kohrs, we're 93% confident we're going to get a 25 bips rate cut. And also, if you check Polymarket, it's pretty much the exact same. So across the board, we're all pretty confident we're getting a 25 bips rate cut. So obviously, you know that extra drama of the SEP, well, that should be a little bit exciting, but we also might get an update of who the next Fed chair is. As I'm filming this, Kevin Hassett has a 77% chance. Obviously, this doesn't happen often, so maybe we do get this announcement. So that could be something obviously to pay attention to. And as recently as earlier today, we have a whole nother piece of drama as it relates to the Fed. Supreme Court appears poised to give president more power to fire government officials. Key justice, however, expresses concern about the Federal Reserve. More specifically, the Fed independence risk troubles Kavanaugh in Trump firing fight. So for those of you who don't recall, it's all about, can Trump fire people who he wants on a whim if they are a Fed governor or voting FOMC officials? So it's in that realm, and there was some drama about Lisa Cook and all that stuff. It is now in front of the Supreme Court, and right now it almost seems that the Supreme Court might be giving Trump a little bit of leeway. So as I've already been saying, and this is kind of the theme of the video, more drama. As I've already shown you, this is all going down Wednesday afternoon. Yes, I will be streaming it. I know I already told you that I stream in the mornings, and we're going to be doing that on Wednesday as well, but in the afternoon, because this is going to be such a big event. I hope to see you there in the live show. But beyond that, between now and then, yeah, maybe after the market closes on Tuesday, you might care about GameStop's earnings. Maybe you care about Cracker Barrel. On Wednesday, maybe a little bit of Chewy. And then in the tech world, it gets a bit more exciting. Oracle and Adobe are reporting after the market closes on Wednesday. But where I get really excited is Thursday, because not only do you have Costco and Lululemon, but you have the world's second biggest semiconductor play, Broadcom, ticker symbol AVGO, which actually had a really nice day today. People are getting pretty excited. And even Nvidia, the world's #1 semiconductor play, had a pretty solid day. So I'm expecting some large movers there. Once again, this is the day after the FOMC meeting. But speaking of Nvidia, some breaking news as of today. Nvidia is set to win US approval to export the H200 AI chips to China. When this was announced, Nvidia stock skyrocketed, so definitely put it on your watch list. And last but certainly not least, speaking of watch lists and things that you can maybe get for free, sign up for the newsletter, MattKohrs.locals.com. It's in the description of the video. This newsletter will come to your email inbox every single Sunday for 100% free. There's no upsells or anything like that. You can see it's a breakdown of the market, cheat sheet for earnings, cheat sheet for all the major macroeconomic events, and then the seasonality of each individual trading day of the upcoming week. Obviously, just a couple resources to help other traders like myself. So there you have it, folks. I know things seem calm. I know things seem placid, but if you ask me, there's a giant beast underneath the water, and depending on how these events do or don't go, is the Fed dovish? Are they hawkish? Who is the next Fed chair going to be? All that stuff is going to decide, are we getting that beautiful, bullish Santa Claus rally to bring in the new year, or are we going to double top right here and all of a sudden come back and sell off, and all of a sudden no one's getting presents, or maybe it's just coal in our stocking stuffers. Now, if you ask me, and I know when it comes to the market, everyone has a thought and a prediction in that. And in reality, I think it's easier to react, as in wait for the breakouts, the breakdowns, risk the recent swing. Your risk is in control, and see if you can ride the trend. Yes, I think that is the best way to play it. But if you force me right now to make some sort of dramatic prediction for this, I would say that Powell, as in the Fed chair, is going to come in pretty dovish. I think we might get that surprise announcement about Hassett, who's also dovish. And just based on monetary policy, I think the market's going to lean into this. And if we could get some cooler than expected inflation, I think that's going to be the match that lights the fire, set to the gasoline, and then boom, that's how we might see in excess of 7,000 by the end of the year. But hey, your guess is as good as mine. That's what I have for you today. I appreciate the good vibes. I'll catch you in the next one.
Peace.